Hey everyone, this is DayTraderRockStar, and this is the high probability watch list for the week of September 22nd. And we're coming up, putting this out on Friday night, and we've all enjoyed today's market. Today's market was pretty exciting with the IPO, Alibaba IPO BABA, and then we had the results of the Scottish vote. And I just want to start off with with this video with just a recap of last night's video. I put out a video yesterday at the close, market radar video, kind of just describing what I thought would happen today, and that really leads into what I'm expecting next week. So I just want to recap that. We were looking, and it has a lot of good technicals on here. So we're just going to review how everything played out. All right, so let's just start off here. You might not. I'm going to record this for this, so it might be kind of weird. Alright, so let's see here. I'm just going to pick up the video right here when we start talking about it. If I can do that. But the Scottish vote, which should probably be, again, if it comes out as a no, it can't hurt. I don't think it's going to hurt the market. I think the market has a shot of that gapping up and then selling off. If we take a look at that 60-minute time frame, it all started again out of a perfectly recognized pattern. And we've been mapping this pattern out. We talked about this level being a great level, and we started moving up off of it. We got back up here. We're embedded now, which is a sign of strength. But that is not, a long-term thing. So eventually we are going to get a little consolidation pullback. My guess is, tomorrow again between the Scottish vote, the hype on the IPO, there's going to be a lot of interesting action here. So we're going to look for that gap up. Possible gap up tomorrow, and then being a Friday, being how the market's kind of extended here and we haven't rotated back here, I'm going to look for that rotation to start tomorrow on the 60-minute time frame. It could go to alright, so we will let me stop this here for now. I don't even know how to start tomorrow on the 60-minute time frame. There we go. And sorry about that. Just trying to capture that, because we want to talk about, that's what I want to talk about now, is actually that 60-minute time frame, because this is, you're going to see it both here and how we ended up, and remember we went into today and the market here gapping up, and we also remembered yesterday on that last video I talked about that 5-minute time frame starting off in an overbought level. So when we start off the morning, either I always look at that 5-minute time frame. I find there's a good correlation between when the market starts up and it's overbought or oversold on that 5-minute to see kind of a reactionary move, a first move of the day, going into the direction where you would expect it to go, like overbought going to oversold and oversold, starting to get that bounce. So we hung up there pretty good too. It was interesting. We actually saw there was a little divergence between the SPX and the SPY. The SPY actually didn't pattern out the same way, and I think it had something to do with the options. But there was some weirdness going on. We couldn't push through, and we were still in, up here on the 5-minute chart. So we know that this is one of the fastest moving or fastest indicators, the 5-minute versus the the 1 minute's a little faster. But this doesn't usually stay up here like this for too long. It does make good rotations and stuff, and that along with the 60-minute time frame, both the same level starting off the day here. So we were right back up here, both the 60 and the 5-minute. That's where that represents that level there. So it was just all that plus the IPO plus the Scottish vote, which kind of the market gapped up on that. It seemed like a perfect opportunity to get some selling into this market. We got it right off. We're pretty much, we look at that 5-minute chart. It started about 10:30. Started rolling over, and we started selling pretty hard, and we got a bounce at the end of the day and then dropped off. But you know what? I think this is kind of telling in the market. I would not, and again, you're going to see this week's watch list, kind of focus on some of the short sides. I took a lot of my longs off. I actually started some shorts, and we're going to discuss more of those. And I have some other good ones. There's about 3 or 4 lane divergences setting up. So there's a lot of things here pointing to a market pullback next week. The hardest thing in the world to time is that type of pullback. In the last time we really went short in this market, we took the VIX and stuff. It was actually in this pullback, and we talked about having the wind in our sail, the pullback, the nice move down, and we also were able to get long here and push it up. So it's been a nice run. The last 2 weeks, other than the oil and gas sector and the basic materials, basically. being the wrong sector for me to be in. The right stocks to be in, we're going to go over, where the stocks that continue to act good in this market. So it's going to be very hard to call that top. I mean, this market continues to not pull back. It continues to be bought up. There is an interesting candle here. We're starting to roll over on the 60. There's some things, we have a weekend. A lot of this news is behind us, so we might still get a little continuation of sell that news, carry over into next week. Just, that's what it feels like to me. Again, I don't usually take those shorts, and I'm starting to look at that as a better option up here. So if we get a crossover here, you're going to actually start to see that lane divergence play out on. We talked about the lane divergence. The lane divergence, good indicator. It is. Sometimes it doesn't, work out on maybe it's, I don't know, a couple of them just broke down, and they seem to be, in very bearish stocks or whatever, very trendy stocks. But a stock that, actually the overall market usually is a good signal if you do have a lane divergence. And the lane divergence is measuring out those highs, like we had this recent high here in the market. And the stochastics were way up here, embedded up here, and then we're going to pull back. Now we make a new high, but if we actually cross back over here on the stochastics, which we look like we want to do, we're going to have a lower high on the stochastics, but a higher high in the price. And that's basically what you're looking for. You're looking for that upward trend in the price and the downward trend in momentum here shifting. And the shift in momentum then brings you in. So there's a lot of interesting things happening going into next week. If this plays out, then that's going to be an interesting trade down here. And that lane divergence is really just active for that first rotation. So, it doesn't mean it's calling the top all the time. Top here. It's just something I would pay attention to. Looking, to take more shorts. A little nervous about this, but like I said, probably one of the hardest things to do is to call a top in this market. So I'm not going to stand behind it as and let it roll, barrel me over. Shorts I am taking, I'm keeping very tight stops, basically at the highs of today's market. If we actually break back above today's highs in those stocks that I'm shorting, including the ETFs. That would be my exit signal right there. But here's another nice little trend line on top of us too. So this is actually kind of confirming too. This is a very interesting level. Definitely looking for downside next week. I'll go on the record and say it. I think next week we have a pullback. So let's start off taking a look at the watch list.